The Fed is ready to do anything they say. The ECB, same deal. But is anyone really questioning the validity of this entire scheme? No, they're distracted. They're just happy someone is doing something. The markets are flush with liquidity, and that's really all that counts right now to investors. They believe that the Fed will never let them down. They wouldn't do it. Markets will always rise. The central banks are so smart, they finally realize that printing lots of money has absolutely no consequences. Fantastic. You came here for the truth, so let me unveil that for you. If you want the garbage, if you want the lies, you're at the wrong place. Click off, see you later. What you are in for is some information that I've been told to stop covering. Don't cover this so often, GPS. I'm tired of hearing about the Fed and the central banks. So guess what we've got today? We've got information related to the Federal Reserve, to the ECB. I'm going to show you the balance sheets, and I'm going to show you how that connects into what we are seeing in the markets. The economy is dead. The economy is finished. And you could say, well, you know what? If we simply would open it back up, then everything would be totally fine. But it's not like that because we've been having these problems since 2018. I've been highlighting that here on the channel as the subscribers have been dwindling, as the views have been dwindling. I've been showing you that. So the people who have stuck around, I want to commend you because you actually want to know the truth, and that is very respectable. So let's get into it today. I wanted to begin by taking a look at this chart. From our good friends at Deutsche Bank, the potential max size of the Fed's balance sheet depends on what they buy. Size of selected US asset market outstanding, and of course, this is not what they have purchased. This is the maximum in which Deutsche Bank sees them going to, whether it's equities at nearly $40 trillion worth, residential real estate, commercial real estate, treasuries, and so on. We've already seen them go to a level that is shocking. If you look at what they've done, imagine the amount of money that they printed. They printed $2 trillion in a matter of, I think it was 4.5 weeks or so. That would have been ridiculous in, just a few weeks ago. And now it's obvious. Well, they had to. So this is it. It's just a done deal. But if you look at all of this in which I show you today, you might think that's crazy. No way they're ever going to do that. But it's certainly possible. Will they actually buy equities? This is the question that a lot of people have, and just knowing that they might buy equities, well, technically they already are with the ETFs, but will they actually buy that? Well, that's a good sign. I might as well get in there because this is going to be an opportunity for me because I can front run what the Federal Reserve is planning on doing. That's the mentality of the computer algorithms, the retail traders, and some investors out there. Now, we've got two very different camps here. We've got some that have said, I know this is messed up. The economy is just completely destroyed, but the Federal Reserve is printing a lot of money, therefore it's going to make everything rise. And then you have the others saying, you know what, I'm just going to wait on the sidelines right now. Maybe I'm going to sell a little bit. Maybe I'm just going to wait here and see what happens because the economy is looking terrible. And that's never a good time to be selling, especially when we have valuations of stocks at the highest ever in recorded history. That's not a good combo. So these two camps are differing. They are disagreeing with each other big time. And I think it's important to look into that deeper. Here you can see the chart from Real Investment Advice. It's showing you the Fed's balance sheet, and then it puts all these different points on there that might be of interest to you. What I want to note is that we've gone beyond anything we have seen previously. All of those instances before suddenly look like nothing. But it's funny to go back and just to see the different events that had taken place, how the market reacted, how the economy was at around that time, and always reminding myself of what has happened in recent history as well as way back when. I love all the books that get into the deep history, the deep detail of different events that have taken place. Those are my favorite books I've read. I've got a bunch down in the link below. But regardless, when I look at what they're doing today, this is never going to actually create a fundamental change in the economy, and that isn't what it's about. They tell you that price stability is one of their major goals, and yet they are here creating the most unstable environment that they possibly can. They're lying to your face, and nobody cares because they're distracted. They're distracted by what's happening now in 2020, but on a normal occasion, people are distracted by Netflix, they're distracted by the sporting events, they're distracted by all this nonsense that's going on out there. And I don't mean to judge anybody, I'm just saying it how it is, and that's just the truth. So what's the result of all of this? Well, buy everything. More than 90% of the S&P 500 is rising. Can you believe it? And why? Because of liquidity. This is what happens. When you do the funny money thing, you get this displacement that occurs. You get a misallocation of capital. People don't care. They're like, well, if this is going to rise, I'm just going to ride that wave. But they don't understand the fundamentals behind it. And then, of course, we have certain events that have taken place where people lose their shirt. People wet their pants. And of course, they have to go to the store to buy new pairs of pants or underpants. And that is a challenge right now, as you know, because the stores are closed. So they got to buy them online. The new underpants don't fit well, and then they got to return them. And it's such a big problem for them. So this is not the time to be needing new underpants or pants, okay? Real Investment Advice also had this list here. I thought it was important to look at because you see it's ridiculous. I mean, March 6th is where it begins, $8.3 billion emergency spending package. And you go down the list and you see all these new facilities that have been created. You see the different packages, stimulus left, right, and center. Imagine they're going ahead with $5 trillion, the government going ahead with $5 trillion worth of deficit spending, of increased debt. And they're going to put this onto your back. And why? Because they're going to take it, they're going to spread it around, and they're going to give it to this business or that individual or this individual, and they're going to determine how your tax money is spent. What do you think is going to happen after all that's been going on today? What do you think is going to happen to your taxes? Do you think your taxes are going to go up or are they going to go down? I got that question. I'll leave it for you, and you can reply in the comment section below. Add Howard Marks to the list of notable investors who believe the market comeback has gone too far. Essentially, they go into all the details, but I just wanted to show you this because we got this big divergence in between people that think this is the time to ride the wave. You got the other group saying the economy is really bad. This is not good. There's a serious problem when you know that the valuations of stocks are this high when things are this bad. Sure, it can be higher than where it was in March, but you've got to see some actual real fundamental changes, and that has not happened. A lot of these big investors, they're not necessarily shorting the market, they're not necessarily doing anything, they're just waiting and seeing. This article here is talking about Jerome Powell. He's saying the government, you got to do more. You need to pump more into the system. And it's a joke, of course, because they are already going to levels they have never done before. The deficit right now is unbelievable. The debt that they are really creating right now will never be able to be paid back. It was an increase in the national debt of $1 trillion in a 28-day period. This is just shocking, but nobody cares. They just want to see it being done. And they say, worry about the debt later. But that's what they always say. And then you see the taxation increasing and increasing and increasing. And this never ends well. This is the type of thing that bankrupts a nation. But don't worry, because the Federal Reserve can always print money to pay their bills. We've heard that one before. This is purely and entirely ignorant. The lockdown has caused an economic crisis that's taking a toll on many Americans. Not only are their wallets getting thinner, but a new survey shows that 3 in 10 Americans have dipped into their retirement savings to help cover their expenses. Yes, this is only a sample survey. We get that all the time. But when I show you these surveys, different times, different places, different amounts of people, they usually come up with fairly similar results. I have documented this over and over throughout the years here on the channel, and when you see something like this, it happens to be a repeating pattern. The survey shows that 30% of Americans have withdrawn an average of $6,700 from their retirement savings from about March through May, and another 19% responded they have not taken money out yet, but they plan to do so. So this is when you know that people are really running up to the edge. They are in debt. They are suffering, and what are they going to do? Are they going to put it on their credit card? Or are they going to take it out out of their 401k. Yeah, they'll take it out of their 401k if they have to. They're going to pay tax if they have to. They got the money from the government. They got the check. They spent it. They had to go into as much debt as possible. But what are they going to do if they have some of that cash sitting there in the 401k? They're going to pull that out. And this means that on top of the losses that they might have taken, they have to then cash out at that price. This happens every single time there's a crisis. People don't realize that because they think, well, I'll just wait it out. If the prices come down, I'll just wait and it'll go back up. But this is not the majority of people and what they experience. They will have a time in their lives. The majority of people will have a time in their lives that there's an unexpected expense that comes up that wipes them off. Maybe it's a health issue. Maybe it's something with a family member. Maybe it's an economic crisis, but it happens. Oh no, not to me. No. I'm ready. I'm prepared. I'm this, I'm that. Look, it's going to happen. For people to be prepared, they have to go far beyond the average person, the average so-called diversified person. You got to be smart. You got to be really willing to go far with this. The preparation that we talk about here on the channel, not what those in the financial industry are telling you to do. Uber's cutting another 3,000 jobs, closing 45 offices. That's also really big because the commercial real estate industry is going to get pummeled even harder. This is important because we are seeing the jobs that are taking a hit, but also what's happening with the derivatives. Now think about this. I've shown you it many times before, but all of these commercial real estate properties, they are connected in with the commercial mortgage-backed securities. And these derivatives are very dangerous right now because so many people are not going to pay their rent. And that's going to really tumble. We've got problems with companies like WeWork. They're connected in with that, as well as Airbnb on the other side of it. The real estate market in general, not looking good, but check out the prices in your local area. Everything's fantastic. I don't think they've got the memo yet. Really quickly, the retail investor is absolutely loving what's happening today. Look at Ford, for instance, where you can see that they have been truly buying the dip. As you can see in this particular chart here, the pink line is what the actual price is, and this greenish line is where, the total amount of investors, and that just gives you an idea of what's been happening. Buying the dip. But is Ford, just as an example, I pulled this up, is Ford a strong buy right now, considering what's happening with the automotive industry? I'll leave that up to you. You tell me. All right, here we go. Big companies cashed in on stock rally with flood of offerings. Companies have raised $17 billion this week. That's the most since 2012. The 7-week rally that pushed stocks higher by 30% was a great time to be selling if you were corporate America. Some consider that what is happening right here is a pump and dump. Now, we're going to have to wait and see how this all goes, but it is interesting. One of those companies has been a very hot topic recently. Moderna plans to issue $1.25 billion in fresh equity following a 20% stock jump. Like I said, some people are saying that this could be a pump and dump. Seems kind of good on the timing. Who knows? We've got very early results here, and I'm not exactly sure that anything could be concrete in a matter of a week or 2 or 3. But the name of the game is all about what the Federal Reserve is doing. They don't really care about all the other programs. They don't really care about anything that's happening overseas. What investors care about right now is the Federal Reserve. And I'm talking about other countries too. They want the Federal Reserve to keep pumping the money and keep destroying their currency. Every dollar that's printed into the system devalues yours. The only group that's created more facilities and all these different packages and stimulus than the Federal Reserve is the ECB. I mean, it's been unbelievable. But now Germany and France proposed a 500 billion euro EU Economic Recovery Fund. They had the EFSF and they had the ESM and they had all of the different CSPP programs and the ASP programs and every other letter of the alphabet. alphabet, and they've been expanding all of these. And what has actually been beneficial from any of this? This has been going on for years. The Euro sovereign debt crisis is really where this started to take off, especially with the EFSF, and this just escalated. The ESM comes in, and then you have more control by the EU and what they are able to do over the particular countries. Oh, okay, you're in a bad situation, Italy. Well, guess what? You have to buy the debt of Spain, and Spain's going to buy the debt of Germany. Germany's going to buy the debt of Italy, and all of you are going to have a party together, and it's going to be so fantastic. They screwed everything up, and people just believe it. They love to be spoon-fed the garbage. I just can't understand why people who are supposedly educated, supposedly informed, actually believe it. The same magazine that called Ben Bernanke a hero said, we can prevent a Great Depression. It'll take $10 trillion. That's just ridiculous when you think that throwing funny money at something is going to fix a problem. If that was actually the case, you wouldn't have the issues that you have right now today. You wouldn't have them. It wouldn't be a problem because they've printed more money right now in such a short period than basically all of history combined. Look at what all of the other countries have done throughout the years. Have they hyperinflated their currencies? It doesn't work. It doesn't do that. And then you look at all the deficit spending that countries have done. This doesn't work. It doesn't work. But that's all pessimistic anyway. If you found this video informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you just click that one button, you'll be helping me out. Thank you. If you want to see content from me on Twitter, on Instagram, I create this stuff every single day. Check me out at The Money GPS. Wait a second, do you want to know how to sell online? Do you want to know how to make money on the side? Well, if you do, check me out at the Amazon, gps.com. My 2 books really outline everything that's going on with the financial system. I talked about Spain and Italy in there. I warned people this would be an issue, and then we see it today going on. It's been unbelievable. You can actually flip through the pages of these books at the link in the description if you want the audiobook, themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? It's incredible. There's so much data in here that you need to watch. Check it out. I'll see you there.